Good evening, VV Nation. This is Ron Wheeler, manager of options trading here at VectorVest, and it's my pleasure to bring you tonight's special presentation, how to identify the right stocks for your option income trades. Now, generating income is massively important, but many people struggle when it comes to finding the right stocks, and maybe you do as well. Maybe it feels like trying to find a needle in a haystack. There's so many stocks out there, you don't know where to look. And even when you do have a list of stocks, you don't know what to look for. You either spend all day looking for one, like going to the library as a kid and looking through that old card catalog, or when you get tired of looking, you pick one and end up placing the trade on the wrong stock. Eventually, you give up trying to use options to generate income. However, giving up is not an option. You don't want to be caught in a position where you won't have enough income when you retire and you're forced to continue working. Instead, you want to be in a position where work is optional and you have enough money to enjoy retirement. And the way you do that is by having the ability to generate a steady stream of income. It's like a tap. You can turn on or off whenever you want. Now, here at VectorVest, we teach to generate income involving two main sources. First, we do it through dividends. Second, we use option trades, primarily using covered calls and credit spreads. Now, while dividends are a nice source of income, option trades are by far the main contributor to your income system. And as I said before, for many people, finding stocks for option trades appears complex. However, as you'll learn today, the key principles are much, much easier than you'd imagine, and it's something you can definitely do. So let's look at the 5 key principles to identifying the right stocks for your option income trades. Key principle number 1 is match the trend. The first thing you need to consider when placing your trades is the overall market direction, and you want to match your stocks to the market's direction. When you don't make sure there's a match, it leads to poor results many times. Now, for our purposes, let's look at the 2 main types of trends you'll see. For the majority of the time, the market will either be in an uptrend or it will be in a downtrend. In those cases, you will either be bullish or bearish. When the market is in an uptrend, only focus on bullish trades and therefore only look at stocks in an uptrend. Now, on the flip side, when the market's in a downtrend, only focus on bearish trades and therefore only look at stocks in a downtrend. Here's what it means to match. At the top, you see the overall market, and at the bottom, you see a stock. Notice how the stock follows, in the most part, the trends of the market. In this case, last year during the coronavirus sell-off, IBM matched the market timing perfectly. In that situation, we trade the market down, we trade IBM down. It's matching the overall market, and that stacks probability in your favor. Now, at the end of that series, we get a mismatch. The overall market is now in an uptrend, but IBM is now starting to trade sideways and down. This is now a mismatch. We only look for stocks that are following the overall direction of the market. So remember, key principle number 1, start by matching the trend. Here at VectorVest, we have ways to help you with both. We'll talk about the stocks in the upcoming key principles. And as far as the market signals go, there's several great ones to use for your income trades. So here's our favorite. This is the DEW signal. Notice it does a fantastic job of identifying both the beginnings of uptrends and downtrends. And we actually use this signal as the basis of our option paycheck system, and it's served us well for many years. The next one is the primary wave. Now, the primary wave is a great signal that we can use in conjunction with the DEW. Oftentimes, the primary wave will turn green right before the DEW. And for those of you that are a little bit more aggressive, when those two time well together, we can get into an early part of the trend. Now, we like the DEW for our option system specifically because it's a longer term signal. we're targeting generally 7 to 10 calendar days. So we like to operate off the DEW. Now, both of these market signals are something that we do utilize, and they both can be a very good core of your income system. Now, key principle number 2 is to make sure that price, what we call, passes the gopher test. You know how gophers poke their head out of the hole to make sure the coast is clear? Well, that'll be a way for you to remember this key principle. On your bullish trades, you want that head poking out of the ground. On a bearish trade, you want to make sure that head's back in the ground. So let me show you what I'm talking about here. First, let's look at bullish trades. The most important aspect is that the stock is rising in price. And the easiest way to identify this is simply by looking at 2 graphs. First, we're going to look at a 1-year graph. And this is it. This is the simple approach to this. The first bar on your screen over in the lower left, that's the 1 year ago date, needs to be lower than the last bar. So you should be seeing higher highs. The last bar on the screen, which is the current bar, should be higher than the first bar, which is 1 year ago. That shows you long-term price direction. Now, we shorten that down. The 3-month graph, again, same idea. The last bar on your screen, which is the current bar, should be higher than the first bar on your screen, which is 3 months ago. Now, that's not it, because we also want to make sure we are trading in the general direction of the day. So a pro tip for you would be this. Your entry signal is only taken if the current price, when you're doing your scans and you're doing this trade analysis, if the price is higher than the prior day's high. That case, that's where the gopher really stuck his head out of the hole. Now, a bearish trade is very, very similar. It's just flipped around. Remember, the most important aspect is that the stock is falling in price. So we're going to go back to those same principles. We're going to look at a 1-year graph. The current bar over on the right needs to be lower than the first bar on the graph. That's 1 year ago. We are making lower lows over the course of the year. Our short-term 3-month graph also needs to be lower. So we use the 3-month graph. We look at the current price, we compare it to 3 months ago, and it needs to be lower than the first. And just like before, we want to make sure that gopher's head is kind of poking down, right? So we only take a trade if the current price is lower than the prior day's low. That's your line in the sand. That's your trigger technique. Now, the third key principle is to check the earnings engine. Remember, earnings is the engine that drives stocks prices higher or lower over time. If the earnings engine is strong, the stock price is more likely to rise over time, and it helps assure the stock price won't move adversely or kind of quickly against you. If the earnings engine is weak, the stock price is more likely to fall over time and is susceptible to quick moves down. Instead of scouring the internet looking for earnings data, let me show you what we do here at VectorVest, which makes things a lot quicker and gives you what we feel to be the best data. Here at VectorVest, we calculate our own earnings per share for each company. VectorVest EPS is a leading 12-month EPS forecast combining recent earnings performance and traditional fiscal and/or calendar year earnings forecasts. For your bullish trades, simply look for that EPS to be steadily rising. We like this nice stair-step pattern that you see here. For your bearish trades, simply look for the EPS to be falling. It can either be a steady stair-step down over time, or, like in this example, a transition from going stair-step up to then steadily falling. Now here at VectorVest, we also have an indicator which helps you to even more identify companies with either steadily rising or falling earnings. And that indicator is RS, or relative safety. RS is a very smart indicator which looks at many things. It looks at earnings consistency, the company size. It also factors in the stock's price behavior, as well as the company's business longevity, its dividend history, and its debt-to-equity ratio. Basically, that one indicator is doing a lot of work for you, so you don't have to. RS is on a 0 to 2 scale, and here you see the rating system. Basically, the higher above 1.0 you get, the better it is for your bullish trades. The lower below 1.0 you get, the better it is for your bearish trades. So remember, key principle number 3 of checking the earnings engine, and use EPS and relative safety to help you identify your stocks. Key principle number 4 is to look for high volume. Now, this is especially important when identifying stocks for your option income trades. Heavily traded stocks are likely to have heavily traded options. Now, why is this important? Well, first, the bid and the ask are closer together. Second, with more people actively trading, you'll be able to have more timely entries and exits. You don't want to be in a position where you're trying to exit a trade, but there isn't a person on the other end. So by looking for stocks with high volume, you're helping to ensure the options are more heavily traded, and thus it helps you get in and out of a trade at the price you desire. Now let's move on to key principle number 5, which is to screen your stocks. Instead of looking at every stock, you want to narrow down the list of stocks to some of the best candidates. It's just like back in the day when people would go panning for gold. They would put everything in it first. Then they would have a screening process where they got closer and closer to the actual pieces of gold they were looking for. Now you're going to do the same thing, but you're going to find your gold much, much quicker. You don't want to waste your time looking for the wrong stocks. Instead, you want to screen your stocks so you are only looking at the candidates that have ideal qualities. And that's when the market is in an uptrend, you only want to deal with stocks likely to rise. When the market is in a downtrend, you only want to deal with stocks likely to fall. So let me show you how to do it. And the best tool I found for this is VectorVest, so that's what we're going to use. Here's an example of a search we have in our Unisearch tool that we created for our options paycheck students. It's a search you can build as well. Now let's look at the criteria of this bullish search and how it really helps us with the key principles that we looked at today. First, let's look at how it helps ensure that stocks are currently in an uptrend. Without getting into all the details of the indicators and how they're calculated, just know this. The search looks for high VST, and it uses our comfort index as a way to sort the stocks. This will help find stocks in uptrends and resistant to price declines. Second, to ensure the stocks have a strong earnings engine, it looks for stocks that have a high relative safety rating. Third, it makes the stocks have an average daily trading volume over 500,000 shares. Now, when you combine all of this together in one search, you're going to routinely find stocks that are very good for options trading, but that's not the end. Lastly, I'm going to add 2 more fields, and what these do is they add my 1 year and my 3-month higher highs. And when you combine all that together, you're going to find stocks that look like this. Notice the price pattern and notice the earnings pattern. Stair step up, beautiful stock. And if you compare this, if you've been watching the market over the last week, CRL, even though the market had some very volatile moves against us, has performed very, very well. Target as well, same pattern. Stair step earnings up, steadily rising price. Google, even in the face of, again, a very volatile market over the past week, big decline, big rally, Google is still stair-step climbing. This is a good search that will help you find these great bullish candidates. Now, there's also searches for your bearish trades. Here's a bearish scan again that we optimized for our option paycheck students. In addition to the high volume criteria, it finds stocks that are in industries that are falling over the last 10 days, and it sorts the stocks by our RT, or relative timing indicator. This brings the stocks with the strongest downtrends to the top of the list. Now, searches like this will help you routinely identify stocks for your bearish income trades. I also, at the bottom, added the same parameters where I'm looking for a stock on a 1 year and a 3-month lower low pattern, just like we talked about earlier. This one here. Notice the downtrending stock price and the poor earnings performance. Here's another. We had steadily lowering prices over the course of a year and 3 months. And if you look back in April, we had earnings which was slightly rising to now falling off the picture. And another. Now that you know the 5 key principles and what they are, let's put it all together and see how it's done. Remember, it all starts with market trend. Now here, I'm showing our market timing graph with our DEW signals. You can see that there was a due up signaled late in May, and then the uptrend continued afterwards. Now, after the DEW signal came, let's say you wanted to generate some income by placing a bullish income trade. Well, first we head to the Unisearch to help identify a candidate. I want you to notice that CRL, or Charles River Labs, was right here in the midst of the candidates. The bullish income trade that we teach as part of our options paycheck system is called the bull put spread. Now, once you set up the trade, ideally we like the stock to continue moving higher, but it's okay if it moves sideways, because as we can see, this stock is near 360 and we have our line in the sand at 350. As long as the stock stays above 350, we can have a chance to make money on this trade. That's the great thing about these income trades. You can generate income even when you don't get things exactly right. Now, you can see that the result of this trade was a $740 profit in 7 days. That's a 27% return on your money. And the great thing is, this type of trade is that you only have to put up about $3,000 in margin to place this trade. That's not your risk. That's just the margin requirements to place this trade. A few weeks later, the market turned down. The DEW signal changed to down. So on July 16th, the market was still falling after the DEW first came in. So let's say again, you want to generate some income by placing a bearish income trade. Well, again, steps are similar. We go right to the Unisearch to help us select a candidate. Now I want you to notice Auto Home right at the top of the list. Now, even though the market itself over the course of the last year has generally been in an uptrend, look at this stock. It's in a downtrend over the year, over 3 months. That's what the Unisearch has picked up for us. Now, when we have this type of pattern, we do something called the bear call spread. Now, again, once you set up the trade, ideally you'd like the stock to continue moving lower, but again, it's okay if it just moves sideways. This stock continued to move down even as the market moved back up in the last week. Now, you only had to put up about $4,500 in margin to make $720. And again, that's not your risk, that's just the margin requirement. So by identifying the right stocks for your income trades and having an option income system in place, you have a way to generate income. And again, going back to the proper stock selection, look at the market over the past week and then compare it to this graph. You're finding stocks that are bearish, even when the market reversed. In fact, let me show you. I did a quick test from July 16th to the current day. Now that the market has rebounded, in the last week, you can see that the majority of our stocks from July 16th are still bearish. Over on my quick scan, you can see that 11 out of the 18 stocks are going down. Now, that's a good thing for us because we wanted to go bearish, right? So 18 stocks, 11 losers, which is good for us. That means they're moving down, versus 7 stocks going up. That's 61% of the stocks that we found are still going down. And you can even take a look at the bottom. Look at the VectorVest composite over that time period. It's up 1.6%, and we're still outperforming that, basically, on the downside of the market. We're looking really good. And even those stocks that are going down, or going back up, pardon me, are still not massively going against us, maybe $1, $2, $3. Remember, with the income trades, even if the stock goes sideways or slightly against us, we still have an opportunity to generate income. That is how you create steady income, whether the market is rising or falling. Now, today, we looked at how to identify the right stocks for your option income trades. That is only one part of your option income system. Let's talk about your action steps right now. The way I see it, you have 2 options. Option number 1, you don't make a plan to create your income stream, and you're in the same place this time next year, worrying if you're going to have enough money when you retire. Now, option 2 is you 100% commit to creating and implementing an income stream this year using a proven system. So if you're ready to create an income stream and you want a step-by-step roadmap to do so, and if you want to get results fast, the absolute best thing you can do is register for our options paycheck course. The Options Paycheck course is a complete A to Z system that helps you generate income each month from option trades. That way you can trade with confidence and live the lifestyle you want without that fear of running out of money. Our clients who have taken this course are conservatively targeting 3% per month in average income. Now, some guys who are a little more active, maybe they're doing 5 to 15% with about a 70+% success rate, and it's taking them less than an hour a week. All of the details can be found at www.optionspaycheck.com. This course will walk you through step by step how to understand the trades, how to find them, how to set them up, how to manage them, and even how to enter them with a broker. Everything. To get more information on creating this option income system for yourself, go to www.optionspaycheck.com today. Registration closes very soon. And when you get to that www.optionspaycheck.com today, you'll notice a special price and a ton of great bonuses. Plus, we're so confident in this course that we offer a 100% money back guarantee. You can go through the entire course, and if you're not 100% confident that you've learned how to tap into a brand new income stream for yourself, then let us know and we'll give you all your money back. Again, go to www.optionspaycheck.com for all the details. Remember, registration closes very soon. If you wait, you'll miss out. I hope to see you in class and help you set up your income stream. Thanks for watching. Good night, everybody.